Hello guys and welcome back for a new video. Today we are taking a look at 5 dividend growth stocks that I am very interested in. Just to clarify, for me there is a difference between a dividend stock and a dividend growth stock. A dividend stock for me is a stock that already has a dividend yield between 3 and 5% with a very low yearly dividend growth rate between 1 to 3%. On the other side we have a dividend growth stock that at the moment only has a small dividend yield of 0.5 to 2% but has an average 5-year growth rate of at least 10%. So to visualize this, I created a little sheet to compare Microsoft, the dividend growth stock, against Altria, the dividend stock with no growth. So I prepared this number spreadsheet to show you why dividend growth investing is far superior than dividend investing. So let's assume we bought in 2017 one share of Microsoft MSFD for $65 and one share of MO Altria for $70. Back then, Microsoft paid a dividend of $1.59 and Altria of $2.54, which gives us a dividend yield for Microsoft of 2.4% and for Altria of 3.6%. So let's now have a look what our share that we bought in 2017 generates us in 2020. Microsoft in the meantime has raised the dividend to $2.09. Meanwhile, Altria has raised it to $3.40. As you can see, our share that we bought in 2017 now yields 3.19% instead of the 2.43%, and Altria now yields 4.84%. But now, as you can see, the share price of Microsoft 2020 is at $223. That's an increase of 340%. Meanwhile, Altria's share price decreased drastically with a decrease of 58%. And if we look here, the total amount of the dividends paid per share in the 4 years for Microsoft it's $7.29, and for Altria it's $12.22. So if we take now our share price of 2017, add the $7 and the share price increase, we have made a profit of $165 per share. If we take the same principle for Altria, we paid $70 per share in 2017. In these 4 years we got $12 in dividends, but the share price decreased to $41. So at the moment we're at a loss of $17. And this shows you why you shouldn't always be chasing high dividend yields. So let's now get into the 5 stock picks. And no surprise, the first one is Microsoft, ticker symbol MSFT. Microsoft is an excellent tech company with a bright future and is operating in many different future-proof sectors, just like cloud computing. Microsoft has a market cap of $1.6 trillion, a PE ratio of 35, which is a bit high, but I'm happy to spend a little more on a good company. The current dividend yield is 1%, with a 5-year growth rate of 10.13%. And that's exactly what you want with a dividend growth stock, a double-digit 5-year growth rate. And according to analysts, Microsoft's growth in 2021 and 2022 will be more than 10%, which is quite a lot if you think how big of a company Microsoft already is. Next up is Visa, ticker symbol V. I think Visa needs no introduction either. It's a global leader for payment solutions, and in my opinion 2020 has accelerated the need for digital payments methods, and Visa will be a solid stock for the future. It has a market cap of $482 billion, a PE ratio of 44, and its current dividend yield is only 0.59, but it has a 5-year growth rate of almost 20%. And here as well, analysts expect very good growth for the future. This year they are aiming for 6% and next year for 17%. In a total different sector is the next stock, Home Depot, ticker symbol HD. As with Visa, Home Depot was one of the winner companies in 2020, and it's a dividend growth investor's dream. It already has a dividend yield of 2.26% with a massive 5-year growth rate of 20.5%. For me, Home Depot is an extremely good pickup for 2021 with its already high dividend payout and the massive growth potential. And analysts confirm the positive outlook for the company with expected sales growth of 17.8%. The next stock is Nike, ticker symbol NKE, and I don't think it needs an introduction either. It's the most popular sport gear producer in the world. The market cap is currently $222 billion with a very high PE ratio of 80. but analysts predict good growth in the coming years, so the forward PE ratio is drastically lower at 50. Nike currently has a dividend yield of 0.78% and a 5-year growth rate of almost 11%. And also with Nike, analysts expect massive growth. In the current year, they're expecting 15.6% of sales growth, and next year a little bit less, but still 11%. Stock number 5 gives us exposure to the semiconductor space in the form of Broadcom, ticker symbol AVGO. Broadcom is trading at $437 per share and has a market cap of $178 billion with a PE ratio of 69, which at first sight might be seen a little bit high, but if you are looking at the forward PE ratio, which is influenced by the estimated future earnings, it's only 16, which is a clear buy signal in my eyes. But it gets even better. Broadcom's current dividend yield is already 3.29% with, wait for it, a 5-year growth rate of 52%. And as you can see, analysts expect the company to grow over the coming years. So yeah, these are my 5 dividend growth stocks that I will be buying aggressively in 2021. And I think, as you can see with the picks, these are all well-established businesses, and I think the risk to reward ratio is simply brilliant. If you enjoyed this video, please consider giving the video a like, and if you want to see more of my content in the future, please feel free to subscribe. And yeah, thanks for watching, and I will see you in the next one.